This is Robert Harper with Virginia Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, June the 21st, 2019, and happy first day of summer to you. The theme for this week was definitely uncertainty over planted acres and uncertainty over yield drag. The trade wrestled with it all week. We started off Sunday night when the board opened for the Monday session at 8 p.m. with a gap higher opening pretty much across the corn, bean, and wheat futures due to more rain that had happened over the weekend and more forecasted in the eastern corn belt. It's going to be that repeat again next week as we watch weather and as the speculators who are long corn, and maybe when we get the Commitment of Traders report today, this afternoon, we'll see more information, but still slightly short beans and slightly short wheat. We'll have that information soon. We also learned this week that President Xi and President Trump will meet next week at the G20 summit. Most people in the grain and the bean world don't expect any type of a deal to be announced between the U.S. and China. That it'll just be a friendly meeting between the two countries. They can praise each other for how much they appreciate each other's economies and just move on. On Monday, we saw the USDA give us the crop ratings, and that's really the shift now. And that crop progress report at 4 o'clock on Monday is going not necessarily focusing on planted acres, but on the quality of the crop that's growing. The corn rating was 59% good to excellent. The rating for the 5-year average is 78% good to excellent. So obviously way off the 5-year average, and that did put some premium into the futures part of your price this week. Obviously on beans, we still need to plant in a lot of those acres, and the bean planted acre number was watched closely this week, 77% planted, with the 5-year average being 93%, and that also put some premium into the futures part of your bean price. If you look at this week, we saw a lot of activity on the futures, but the way it shaked out at the end, at the close today, December corn was off a nickel for the week, November beans was off a penny for the week, and July wheat was off 14 cents for the week, Chicago wheat. And really back to that Monday report in regard to wheat, we did see a great good to excellent rating on the hard wheat crop, and that harvest is underway in Texas and Oklahoma. That took some premium out of the wheat board this week. We also had a lot of discussion this week in social media and a lot of media outlets about the National Ag Statistics Service and about how they take in the crop acre data. It's a lot of good information out there from some really good folks at NASS that were very public about how that data is taken this week, so I encourage you to go look at that. We also saw this week some continuations with the China-Canada trade issues that are going on, with China canceling a pretty large shipment of pork. You can read about that also, but again, just like with the Canadian canola, it's just an issue of some issues between China and Canada in regard to trade. We saw the euro continue to weaken this week, and there was a little chatter in that community about would there be a stimulus package to try to spur that currency's value. The U.S. dollar had a choppy week, still remaining pretty strong, but with all the issues going on in politics and with the Iranian situation, it did hurt the dollar some this week. Take a look at that, and also keep your eye on the crude oil futures as we see those issues in the Middle East. The Federal Open Market Committee met this week. They did not lower the interest rate as some people were expecting. We saw a lot out of that meeting that they're working hard to keep the inflation in the United States at 2%, and they say we're running around 1.7 or 1.8% inflation, so there might be an interest rate cut coming soon to try to get that inflationary number up some. Mexico was the first country this week to ratify and approve the U.S.-Mexico-Canada agreement. That's a big deal. And the other neat thing, the St. Louis Harbor, it's been about 10 weeks since the Mississippi River has been unnavigable, and the river was opened up this week by the Coast Guard, and they said it looked like an armada of barges that had been anchored there at the St. Louis Harbor heading north. So a big deal there. Next week is very important. It's the last week of the month, the quarter. There's going to be a lot of fun positioning, and remember, all the trade next week is going to be hubbing around what's going to happen in that June 28th acre report and what's the USDA going to say. Give us a call if we can help you with basis or anything else. This is Robert at Farm Bureau's Grain Division.